Hey everybody, welcome to Chapter 7. This is problem 7-7B, which is just like 7-7A in your homework. This would be the second homework for Chapter 7. So I'm just going to get started with it. You see on the right here it says Noble Corporation prepares monthly cash budgets. Relevant data from operating budgets for 2014 are shown. And there's all the information. Then all sales and purchases are on account. Budgeted collections and disbursement data are given below. All other expenses are paid in the month incurred, except for administrative expenses, which include $2,000 of depreciation per month. Remember, depreciation is a non-cash expense, meaning we're not paying any cash for it now. It's an expense that represents cash we paid in the past when we purchased a large asset. And then it gives us all this data: collections for customers, payments of purchases, other receipts, other disbursements, and then it gives us the company's cash balance on January 1st. It's 40,000 and, oh, I'm sorry, it's 52,000. The company wants to maintain a minimum cash balance of 40,000. All right, so we will start with 52,000 on January, and then we'll go from there. So first thing we'll do is we'll add in any cash we expect to come in. So we'll add our cash receipts, which will include collections from customers. It says collections from customers. We expect to be $279,500 in January. So $279,500. Let's see. Other receipts. Looks like we have some interest receivable. Of $7,500. And is that it? Or let's see, collection of December 31st, interest receivable, $7,500. And collections from customers. And that should be it. So that's all the money they're bringing in January. So we'll say total receipts. Which will equal $287,000, and then our total cash available, which should include our beginning cash plus any total receipts we expect during the month. So $339,000. Now we have to account for cash disbursements, or money we expect to pay out. That will include purchases. So a couple things, just so you know. It says all of the sales and purchases are on account. That's why I didn't use these sales as the money coming in. Instead, it's the amount we're collecting from customers. So in January, we're collecting some money that was owed to us from a previous month, as well as some of these sales. That's why we use that $279,500 instead of the $260,000, just in case that's confusing. All right. So our purchases for the month are $112,000. Let's see. But we didn't pay for all of it. So even though there's $112,000 up here, we're only paying $106,000. What that means is the remaining $6,000 we'll be paying in a future month, right? If you think about it, you don't pay for everything in cash always the month you purchase it. So that's what's happening there. That's why we'll use this number, 106,000. Salaries, it says all other expenses are cash. So our salaries expense is 72,000. And it says with the exception of administrative expenses, which include 2,000 of depreciation per month. So what we're going to do is we're going to take that amount of 58,000 and we're going to subtract out the $2,000 in depreciation expense, which is a non-cash expense. So there'll be $56,000 in cash paid on administrative expenses during the month of January. And then we have selling expenses, which should be all cash. So that should be, no, does it tell us there's, yeah, that should be all cash, $30,000. And then it also tells us other disbursements. In January, they're going to pay $35,000 on a note payable. So that means they're paying off a loan. And that should be all of their disbursements for January. So we will add those up. Sometimes when I'm in a shrunken down view here, I can't see my sum button. There's our total disbursements. And then we'll have an excess or deficiency of available cash over disbursements, which is just going to be the total available cash minus the total disbursements. So we have $40,000 in cash left over, and that should do us. We don't need to borrow any money. It says here that they want to maintain a minimum cash balance of $40,000. So we have that $40,000, so we don't need to do any borrowing or anything like that. So that's going to give us an ending cash balance of $40,000. That means when we roll into February, we'll start with $40,000. And now we can do our collections. We expect to collect $298,000 from customers. We also expect there's no interest receivable for February, but there is proceeds from sale of securities. So I'm going to put that here. Which is $8,000. So again, our total receipts and then our total available cash will equal our beginning balance plus our total receipts, or $346,000. Our purchases tells us right here we're $116,000. Our salaries tells us right here are $78,000. Our administrative expenses were $60,000. We're going to subtract $2,000 out for the monthly depreciation expense. So even though we had $60,000 in total administrative expenses, we only paid out $58,000 in cash. Our selling expense, $36,000. And our note, look, I spelled note payable wrong. Don't judge me. All right, our note payable, let's see. There's no note payable, so we don't have to worry about that. But we do have, it looks like, a cash dividend of $5,000. So our total disbursement will be $293,000. Our excess or deficiency of cash then will be the total available cash minus total disbursements. We have $53,000. Now let's make sure we follow all the instructions here. It tells us the company has a cash balance is expected to be $50,000. The company wants to maintain a minimum cash balance of $40,000. So you would think that would be good. although it makes it look like when I double check the answer key, yeah, I have an answer key here that I'm looking at, that they want us to make sure that they don't have any more than 40,000 left over. Not sure why they're doing it that way, but that's what they have in the key. So under financing, they're going to use some of that additional money to repay a loan, and so that their ending cash balance will stay at that 40,000. That's how they have it laid out. And that's it. That's the whole problem. So hopefully that's pretty doable. That last part could be a little bit confusing. Pull this back up. Sorry about that. Let's see, the company's cash balance. This says they want to maintain. It doesn't say to do a maximum of 40,000, but again, that's how they have it laid out in their instructions. So that's how I'm going to do it here. And that's it. Thanks very much.